Welcome to a Now Explained Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for a Now Explained Rough Cut. So now, let's get explaining. The trial balance, what it is and how it is created and used to create financial reports. What you need to be familiar with: general ledger, debits, credits, and other terminology you should understand: double entry bookkeeping, T-account layout. What is a trial balance? A trial balance is a list of all the individual general ledger accounts. It lists the name of the general ledger account and the balance of that general ledger as at the date of the trial balance. If the balance in a general ledger account is debit, then it will be recorded in the debit column of the trial balance. If the balance in a general ledger account is credit, then it will be recorded in the credit column of the trial balance. The trial balance is a trial listing of all the balances in your general ledger, hence the name trial balance. If the total of the debit balances does not equal the total of the credit balance, then there is an error in your general ledger. Here's general ledger extracts showing what is placed on the trial balance. So we're going to start with the debtors control and place its balance, its debit balance, onto the debit column of the trial balance. To creditors control, its balance is on the credit side, so we're going to put that in the credit column of the trial balance. The bank, it's a debit balance of $796.40. We're going to put that in the debit column. And petty cash, it has a debit balance of $28.50, and we're going to put that in the debit column as well. So each general ledger account balance will be listed on the trial balance. So we'll go all the way down for debits and credits. Debit balance in the debit column and credit balances in the credit column. The trial balance must always balance. Your trial listing of debit values must equal credit values. If the trial balance does not balance, then you must find the errors. In a manual book system, if there is errors, you must check each individual general account to see if you can find the error. Here are 7 shortcuts you can use to help speed up the process of finding the error. 1. Compare the balance in your debtors ledger control account to the total of the individual customer accounts. If the amounts are different, then there is probably an error in the customer's account or the debtors ledger control account. Compare the balance in your creditors ledger control account to the total of the individual supplier accounts. If the amounts are different, then there is probably an error in the supplier's account or the creditor's ledger control account. 3. Compare the balance in your VAT control account to the VAT return for the same period. If the amounts are different, then there is probably an error on that VAT return or the VAT control account. And some more shortcuts. Continued. Number 4. Compare the balance in your general ledger bank account to your bank reconciliation. If the amounts are different, then there is probably an error in the general ledger bank account or an omission or an error in a calculation in the bank reconciliation statement. 5. Compare the net total sales in your sales daybooks to the sales value in the trial balance. If the total amounts are different, then there is probably an error in the sales general ledger account. 6. There will be general ledger accounts that you will be expecting to have certain values in, such as you bought a new computer for €1,000. So there should be an increase of €1,000 in the general ledger account for computer equipment. When you look at the trial balance, you may see values that may not make sense to you, such as maybe a very high stationery cost for the month. You should check these general ledger accounts to see if there is an error in the general ledger for these accounts. Trial balance and financial reports. The trial balance is the report that all other financial reports are created from. The profit and loss statement and the balance sheet is the trial balance presented in a different format. If you separate out the profit and loss statement, their general ledger accounts, from the balance sheet, general ledger accounts, you can produce basic financial reports. In this case, there's a loss of €186. Trial balance, the source for all other financial reports. Do not try and prepare any other financial reports until you are sure that your trial listing of general ledger balances shown in your trial balance is balanced and correct. If the values in your trial balance are wrong, then all other financial reports created from it will be wrong. The accountant usually takes the trial balance created by the bookkeeper and with it creates the other financial reports. The accountant may also examine the general ledger balances not just for the values but also to ensure that the sales, costs and expenses are correctly analysed in the general ledger, for example, to ensure that the purchase of computer equipment was not recorded in the stationary general ledger account. The trial balance is the final report in the double entry bookkeeping system. Ultimately, its source of information are the books of first entry, the sales invoices daybook, the sales credit note daybook, purchase invoice daybook, purchase credit note daybook, petty cash daybook, bank receipts daybook, bank payments daybook, and the general journal daybook. It is from these daybooks that the general ledgers are created. It is the balances in these general ledger accounts that are then used to create a trial balance that balances. The trial balance is testing to see if all the general ledger balances are balanced. For more information, please go to nowexplained.com. Thank you for watching.